Everyone, this is Matthew Cruz at Comstock Investments. I'm going to be sharing with you the November supply demand report that just came out this Wednesday, November 9th at 11 a.m. Before we get started, I got to always show you the disclaimer that futures trading does involve risk. I'll let you read through that here quickly. So jumping right in here, production came in relatively close to what the average trade was looking for at this 13.93 billion bushels. You can see here the average trade was looking for this 13.89. So a slight bump from last month, and that was based off of the USDA actually increased the average corn yield at 172.3. Compared to what the average trade was looking for. They were expecting it to stay the same at this 171.9. I was actually looking for it to decrease even more, and so not to actually increase that by 0.4 of a bushel. And so that gave us another 35 million bushels to our production bottom line here that we see here in this 13.93 billion. Looking at the soybeans, we came in at 4.34 billion bushels. Modestly higher from this 4.327. Similar situation where we added 0.2 to what the average trade was looking for, actually 4.4 from what we were at last month at this time. And so that's where we see that production increase in that 4.34. Looking at the grain ending stocks, corn fairly neutral to maybe slightly positive, where the while we did add 10 million bushels to the ending stocks, the trade estimate was actually expecting quite a bit more, and I think that was because they were expecting there to be a reduction in exports, and the USDA did not make any changes to those exports, so we'll get into that. So that you could see here that we still came in slightly less than what the estimate was looking for at this 1.182 compared to the 1.21 billion bushels for ending stocks. Soybeans pretty close to what the average trade was looking for at this 220, so 20 million more from last month at 200, but pretty close to what the average trade was expecting, so no surprises there. And then similar to wheat, very close, within 5 million bushels of what the average trade was looking for. Which was at that 576 million bushels from last month. So no major surprises there in wheat. Looking at the global supply at different production in Brazil, they maintained 152 million metric tons. Corn was at 126, so no changes there. But we got a long ways to go yet before we can make any changes in that crop. You won't see that number change for a while yet. Looking at the soybeans in Argentina, they did make some modest reductions there from last month. We were at 51. They reduced that to 49.5, and then they left the corn unchanged at 55. Looking at Ukraine corn, that 31.5 is unchanged from last month, but you can still see it's down quite a bit by 11 million metric tons from last year at this time. And then Ukraine wheat's at 20.5 million metric tons, unchanged from last month, and down about 12.5 million metric tons from last year at this time. Global ending stocks were right on the nose with corn. They guessed 300.8 million metric tons for average estimate, and they came in right on target. Soybeans are at 102.2, so that was a boost of close to 2 million metric tons, a little bit more than what the average trade was looking for. And then wheat came in at 267.8, modest increase from last month's 267.5. So just taking a closer look, this is the corn balance sheet. You can see here where we got our increase in yield of 0.4 of a bushel, and that added 35 million bushels to our overall production. We left imports unchanged. However, our saving grace was that they actually increased feed usage by 25 million bushels, and so that, of course, partially offset that 35 million bushels increase in production. And so we come down here. And the surprising thing was they left the exports unchanged. I think a lot of people were expecting there to be another adjustment lower in those exports, considering lately they've been quite dismal. Even this week, they've been extremely poor. But we aren't quite yet. We should see those exports pick up, hopefully, in as we get further into the winter and on into spring. Spring is kind of our peak export season, and so we got a long ways to go yet before we get there. But I think the main problem is that our corn is just not priced competitively to the rest of the world, especially in Brazil. So overall, our ending stocks increased just by a modest 10 million bushels to this 1.182 billion bushel level. Looking on soybeans, similar situation. They added 0.4 of a bushel to the yield. That threw on another 33 million bushels. Crushings, they did increase that 10 million, as well as the residual usage. So overall, we just increased the ending stocks there usage by 12, and then ending stocks increased by 20 million bushels. And that's how we got to that 220 million bushel ending stocks here for soybeans. Looking at wheat, not a lot of change here. They increased food usage by 7 million bushels, decreased seed usage by 2, and so that's how we get this modest reduction in 5 million bushels from 576 to 571. Looking at the corn market, how it's reacting today, we have seen some weakness coming into this port. I think a lot of people were concerned about the export market. This is not the close, but we did see a modest bounce off of this 658 support level that we see here. So we're actually trading up 1.5 at this moment, but that's not the close. But a good signal that the corn market, maybe find some support, and so we'll hopefully be able to build on that and move higher back to this $7 level, which I think what you're going to see is we might be trading sideways for a while until we get more news between the 660 and the $7 level. Soybeans is kind of trading sideways today based on that news. The trade guess came in right at the what the ending stocks was. We're glad to be past that report, and it's kind of reduced some of that uncertainty. And so, the ending stocks is still pretty low for, historically, just a few years ago, we were up close to 1 billion bushels. And so I think the biggest thing to weigh on the market now looking forward is just going to be the Brazil's crop is continuing to get bigger, as it looks like they've overall had pretty good favorable planting conditions. And so the market's going to be kind of laser focused on what's going on in Brazil and their crop there. Looking at the wheat, you kind of see so far we're kind of trading lower in the wheat. We're down 15 and a quarter here. It's not the close, but I think hopefully we'll get a little bounce here, and kind of follow in lockstep with the corn. But really wasn't a negative report, more of just a neutral report today. But I think the wheat market's looking pretty hard at what's going on in the Ukraine, and it seems like they're making some progress there. But this Saturday they have to renew their grain corridor agreement, and it looks like that's going to happen. And so I think there's a lot of negativity built into the market because of that. So if you're a bull, you're going to focus on the grain corridor, and if that's going to continue to stay intact. Big news was that the feed usage was picking up today, and so that offset some of our loss in some of those additional production that we picked up. You can point out there is some dryness in southern Brazil, especially in Argentina. Argentina is starting out their season very dry, but they haven't planted very much yet, and so there's a lot of season yet to go. Basis levels are still strong, especially in the Western Corn Belt. I think a lot of the market's looking to what's going to happen with the inflation numbers, and hopefully those inflation numbers begin to to peak and start to drop here, and that will mean that the Fed will will slow down their interest rate increases. Probably won't stop it, but the interest rate increases will begin to slow down. Now, if you're a bear, going to point out that hey, the corn exports are weak, and could weaken even further, and you don't see that picking up anytime soon. And of course, you'll talk about that the grain corridor, looks to be going well. There was a scare a couple of weeks ago, but it looks like that could be strengthening that agreement here, and they're supposed to renew that this weekend, actually. You can talk about, of course, the macroeconomic conditions with interest rates increasing, a lot of layoffs in the tech economy right now, and then the dollar is still pretty high, and so all those things kind of hurt on our demand. Thank you for watching. As always, if you have any questions, feel free to give us a call at 712-227-1110. Thank you and have a nice day.